Wesgro hosted their seminar series in Cape Town this week, bringing national decision makers to meet business to talk about the Western Cape economy, the national economy, and look at aligning ourselves with national policies and some of the government's objectives. Given the recent Eurozone woes, it was the perfect opportunity for business makers to address how this affects our economy, both locally and nationally.
Well, I think there's a lot of questions that the business community in the Western Cape has. I think they're looking for certainty. They're looking for a bit more detail on the President's plan. So we have just gone through a process of participating in the review of state-owned enterprises. Minister Manuel's come out with his National Planning Commission's document.
For business owners, the most important message coming out of President Zuma's speech was his reassurance of where South Africa lies and what his plans are going forward.
While we have consolidated our penetration of traditional markets such as Europe, we are also growing in new markets such as China, Brazil, India, and in our own continent. However, as you are aware, we are working under a difficult climate of a global economic slowdown. The demand for South African products in the markets of our traditional trading partners, the United States and the Eurozone, has manifested a sharp decline.
With the current state of the economy and the new growth plan set out to create 5 million jobs by 2020, many question whether the necessary growth has been achieved. We spoke with Minister Rob Davies on what action needs to take place.
We need to do two things. We need to raise the growth rate, the economic growth rate, so GDP per capita growth rate, but we also need to raise the labour absorbing content of growth. So we need to get more jobs per investment. We need to move into much more labour absorbing activities. So I think that growth rates per se are certainly going to take a hit from the global crisis. On the best case scenario, our biggest trading partner, the European Union, is going to go into a long period of constrained growth. On a worst case scenario, some parts of it at least are going to go into recession, and I think that's going to have an impact on us. It's going to mean we need to diversify. It's also going to mean that we need to rely on increasing the labour absorption capacity of our economic activities, and I think that's what the growth path, the new growth path, is all about.
In October, South Africa's labour productivity fell to its lowest levels in 40 years, and given that labour productivity growth is an indication of job creation, it is a major concern. President Zuma went on to make a reference to government's role in job creation, as well as in which sectors he would like to emphasize growth.
As you are aware, government do not create jobs. They create the right environment to enable the private sector to grow businesses and create jobs. To boost economic growth so that we can be able to create jobs, we launched a new growth path last year and an industrial policy action plan the year before. In our new growth path framework, we promote investments and growth in 6 areas. These are infrastructure development, agriculture, mining and beneficiation, manufacturing, the green economy, and tourism.
The resounding voice was that government, the private sector and industries need to come together to identify opportunities and put plans into action. On a global scale, we need to not only continue to strengthen our ties with the Eurozone, but also focus on developing markets.